Here's something they don't teach you in any adulting class. You can have homeowner's insurance. You can pay every single premium on time for 30 years. And the day a tornado takes your roof off, your insurance company can still look you in the eye and say, "Yeah, we're not covering that." I spent 20 years in Fortune 500 disaster recovery. I've watched billion-dollar companies get blindsided, not by the disaster itself, but by what they assumed was covered and wasn't. And here's the thing, those same mistakes, the exact same ones, they're sitting in your filing cabinet right now, or more likely, in a drawer you haven't opened since you signed the mortgage. I'm going to walk you through 5 insurance mistakes that will absolutely bankrupt a family after a disaster. Not might, will. And the fix for every single one of them takes less time than watching this video. Let's get into it. 5 insurance mistakes that will bankrupt you after a disaster. In corporate disaster recovery, we have a concept called a recovery gap. That's the distance between what you think is protected and what actually is when everything goes sideways. Most companies discover their recovery gap at the worst possible moment, during the disaster. Families, same exact problem, except a corporation can absorb $1 million surprise. Your household probably can't. Now, quick disclaimer. I'm not an insurance agent. I'm not a financial advisor. I'm a disaster recovery professional who has spent 20 years watching what goes wrong after the disaster. And a lot of what goes wrong starts with insurance gaps nobody told you about. So talk to your agent about your specific situation. But know what questions to ask before you pick up the phone. So think of your insurance policy the way I used to think about a company's business continuity plan. It's not a safety net. It's a contract. And contracts have gaps, exclusions, and fine print that only matter when the building is on fire. Here are the 5 gaps I see families fall into over and over again. Mistake number 1. You don't have a home inventory, and I already know what you're thinking. Ernie, I know what I own. No, you don't. Here's what happens. A pipe bursts, or a fire takes out the kitchen. You call your insurance company, and the very first thing they say is, "Great, tell us exactly what was damaged when you bought it and what it cost." And now you're standing in a soggy living room trying to remember whether that TV was a 55-inch or a 65-inch, whether you bought the couch in 2019 or 2021, whether your wife's jewelry was worth $800 or $3,000. Every item you can't document, that's money you don't get back, period. In corporate DR, we call this asset inventory. No Fortune 500 company on the planet would try to file a claim without a documented asset list. They'd be laughed out of the room, but families do it every single day. Here's the fix. And it takes almost no effort at all. Walk through your house with your phone. Open every drawer, every closet, every cabinet. Record a video narrating as you go. This is the living room. Samsung 65-inch TV. Purchased 2023. Paid around $1,200. That kind of thing. Takes about 45 minutes for a typical house. Upload it to cloud storage, Google Drive, iCloud, Dropbox, anywhere that isn't inside the house that might burn down. That 45 minutes could be worth $50, $60, $100,000 in claim value. There is no better return on time in household preparedness. None. Mistake number 2. And this one is sneaky because it sounds like nothing. Somewhere in your policy, there's a line that says either actual cash value or replacement cost. 2 little phrases, massive difference. Let's say a storm destroys your 10-year-old roof. Replacement cost coverage says, here's what it costs to put a new roof on your house. That might be $25,000. Actual cash value says, well, the roof was 10 years old, so we're going to depreciate it. Now you're getting $12,000. For the same roof, same storm, same damage, you're eating a $13,000 difference because of one line in your policy. Remember when your dad used to say, you get what you pay for? This is what he was talking about. He just didn't know it applied to insurance writers. Here's your action step. Pull up your declarations page. That's the summary sheet that came with your policy. Search for the words actual cash value or replacement cost. If you see ACV anywhere on your structure or your contents, call your agent this week. Upgrading to replacement cost usually adds somewhere in the range of a few $100s a year to your premium. A few $100s a year now versus tens of thousands out of pocket later. That's not even a close call. Mistake number 3. And this is the one that bankrupts more American families after disasters than probably any other single mistake. You assume your homeowner's insurance covers floods or earthquakes or both. It doesn't. I need to be direct about this. Standard homeowner's insurance in the United States does not cover flood damage, does not cover earthquake damage, does not cover sewer backup in most cases, does not cover landslides or mud flows in many cases. These are separate policies or separate endorsements you have to specifically ask for and pay for. And here's why this matters more than ever. Flood maps are redrawn constantly. Neighborhoods that weren't in a flood zone 5 years ago are in one now. People who've lived in the same house for 20 years and never had water in their basement are suddenly dealing with 8 inches of it. In corporate DR, we do annual risk assessments. We don't look at what happened last year. We look at what could happen next year based on changing conditions. Households need to do the same thing. Here's the action plan. 3 things. First, go to FEMA's flood map site. It's free. Punch in your address and see what zone you're in. If you're in Zone A or Zone V, you have significant flood risk and you need flood insurance. If you're in Zone X, you have lower risk. But lower does not mean zero. More than 20% of flood claims come from low-risk zones. Second, check your earthquake exposure. If you're in California, the Pacific Northwest, the New Madrid zone in the Midwest, parts of the Southeast, you should be looking at earthquake coverage. Third, ask your agent specifically about sewer and drain backup coverage. A rider for this typically costs somewhere around $50 a year. A sewer backup cleanup can easily cost $10,000 to $20,000. $50 versus $20,000. Come on. Mistake number 4. Your policy hasn't been updated since the last time you refinanced, or moved, or maybe since the Bush administration. And I'll let you pick which one. Here's the problem. Your life has changed. You finished the basement, you remodeled the kitchen. Your wife started a home business with $10,000 in equipment in the spare bedroom. Your kid came home from college and brought a gaming setup that cost more than your first car. And let's be honest, your first car cost about $1,500 and had a cassette deck. So that's not a high bar, but still, none of that is reflected in your policy unless you told your agent about it. Your insurance company isn't psychic. They're covering the house you had when you signed the paperwork. In corporate continuity, we have a process called planned maintenance. Every year, sometimes every quarter, we review what's changed. New assets, new risks, new people, new dependencies. Because a plan that reflects last year's reality is a plan that fails this year. Your insurance policy is the same thing. It's a plan. And it needs maintenance. Here's what I want you to do. Set a calendar reminder right now while you're thinking about it. Once a year, same month, you review your policy with your agent. I use January because it's a natural reset, but pick any month that works for you. Walk through 3 questions with your agent. 1, has my home's replacement value changed? 2, have I added anything that needs a rider or an endorsement? Think home office equipment, jewelry, collectibles, high-value electronics. 3, have my risks changed? New construction nearby that changed drainage? Trees that have grown over the roof line? A pool you added last summer? 1 phone call, once a year, 30 minutes. That's the difference between a policy that works and a policy that was obsolete before the storm even hit. By the way, I built a free 15-minute household risk audit that walks you through exactly this kind of review. Not just insurance, but all the gaps most families don't think about until it's too late. Link is in the description. Takes 15 minutes, could save you $15,000. Grab it. Mistake number 5. The disaster happens. You call your insurance company, and then you make every mistake in the claims process that guarantees you'll get less than you deserve. Not because you're doing anything wrong on purpose, because nobody teaches this. In corporate disaster recovery, filing a claim is a formal, documented, strategic process. There are people whose entire job is managing the relationship with the insurer after an event. Families don't have that. So let me give you the framework. Rule 1. Document everything before you clean up. The second a disaster hits and it's safe to re-enter, you take photos and video of every single thing. Every wall, every floor, every item. Adjusters aren't there yet. They might not be there for days. Your documentation is your evidence. Without it, it's your word against their assessment. Rule 2. Don't throw anything away until the adjuster has seen it. I know the instinct is to start cleaning immediately. Fight it. That waterlogged couch, those ruined clothes, the warped hardwood, leave it. Move it to the garage if you have to, but do not put it on the curb until it's been documented by the adjuster. Rule 3. Get your own estimate. You are not required to accept your insurance company's contractor or their repair estimate. Get an independent estimate. If there's a significant gap between what they're offering and what a contractor says it actually costs, you have leverage. Rule 4. Keep a paper trail of everything. Every phone call, write down the date, the name of the person you talked to, and what they said. Every email, save it. Every form, copy it before you send it. If it's not documented, it didn't happen. Remember in school when the teacher said, "Show your work"? Same principle. Show your work. Let's bring it home. 5 insurance mistakes, 5 things that turn a bad day into a financial catastrophe, and 5 fixes that take almost no time at all. 1. Build a home inventory, 45 minutes and a phone camera. 2. Make sure you have replacement cost, not actual cash value. 3. Check whether you need separate flood, earthquake, or sewer backup coverage. You probably do. 4. Review your policy once a year. Set the reminder today. 5. Know how to file a claim before you ever have to file one. None of this is complicated. None of it requires a doomsday bunker or 100 pounds of freeze-dried food. It's just paying attention to the stuff nobody tells you to pay attention to. If this helped, do me a favor. Share it with someone who owns a home, because most people don't find out about these mistakes until the adjuster is standing in their living room telling them no. I'm Ernie. This is Prepared Not Paranoid. Build the plan. Skip the panic.